The Bank of Spain is opening a registry for crypto service providers. All entities, including banks that are already regulated, have to register, paving the way for crypto-related services in the country. Joining us now to discuss from Madrid is Noelle Acheson, Head of Market Insights at Genesis Global Trading. Welcome. Always a pleasure. Noelle, of course, a former CoinDesker. Always great to have you back.
Good to see you, Christine.
From this Bank of Spain announcement, folks in the country have been waiting for the Bank of Spain to issue out instructions for banks on how to register for potential crypto-related services in the country. So what is the significance that they're finally making some sort of move?
It's exciting, Christine, in that it is a signal of official recognition that crypto assets are going to form a meaningful part of the financial landscape, not only here in Spain, but across Europe, because obviously we are part of the European bloc. It also echoes the growing urgency around regulatory crypto clarity that we've been seeing in the US as well, with the heightened expectations around the stablecoin regulatory framework that we're expecting to drop any day, and also the questions around what type of products will next be allowed to list. But the Bank of Spain announcement, it is important to stress, Christine, that one isn't a surprise. It has been long awaited, but they did meet the self-imposed deadlines. And it isn't really regulation. What it is the Bank of Spain establishing some right to supervise who gets to trade and offer crypto asset services in this country. They can deny registration, but mainly this is a money laundering thing. This is about making sure that everyone who wants to offer crypto asset services in Spain has to comply with the mandatory money laundering rules. And it is a step forward to preparing for the European-wide regulation that we expect to be passed next year and enacted shortly after that. That's the real exciting development, the pan-European regulatory framework for crypto asset services and issuers.
Interesting. And we are coming off of all-time highs for Bitcoin, just under $67,000 reached last week. And I wonder if you could speak to, price outlook at the current this week. And we see that, with the Bitcoin ETF, futures ETF that was released, launched last week, that there has been a lot of excitement. There's been a bit of a breather. Where do you see that activity playing out in Europe?
It's a really good question, Christine. I do have to say these are my opinions, not that of my employers, and nothing I say is investment advice. But we're in a very bullish environment right now. The ETF listing last week, while I don't think it's a great product, certainly not as good for retail investors as a spot ETF would be, the fact that we have a Bitcoin-linked ETF listing in the United States is still pretty epic. And that, combined with growing signs of increasing mainstream access, you've seen the news that some U.S. banks are now offering crypto trading, Bitcoin trading to their clients, and this is going to increase as the year progresses. That is really exciting. It does also mean that perhaps a spot ETF is no longer going to be the gift to the market that it would have a couple of years ago, because there are so many good alternatives now for the retail clients to get access to Bitcoin exposure. But this march of institutions towards embracing this new asset class, which just a few years ago was something that most of them wouldn't have touched if they could avoid it, is really exciting. Combine that with the upcoming Taproot upgrade that you mentioned earlier, that I don't think it is priced in. I do think that we're going to be getting a lot more positive coverage on the potential benefits and consequences of this upgrade as we near the date. It's not like the market hasn't had a lot of other things to focus on meanwhile. And plus we have the macro environment that is supporting the investment, the diversification into Bitcoin specifically, especially with the decreasing use of the word transitory when it comes to talking about inflation.
So would you see that this rally is driven primarily by institutional investors or retail driven?
Still largely by institutional investors. There's a lot of data points that support that. We are starting to see some signs of the retail investors come in, specifically in the derivatives markets. We're keeping an eye on the overall leverage there and the types of investment and the types of instruments that they're buying. So starting to see signs, but nowhere near the frothiness of where we were in the market last time we hit these price levels on the way up. So institutional for now, retail starting to take notice, but we still, in my opinion, we still have some way to run.
Well, I wonder if you could forecast any price projections for the end of the year.
I'm afraid I can't do that, Christine, but I can say higher.
Higher, fair enough. With these premiums that folks have to pay for the ETFs, I see it's up to 20% at times. So is it just a bad investment to go into these ETFs? And if so, who's going into them?
That's one of the reasons why I do think that it is such a pity that it doesn't look like we'll be getting a spot ETF anytime soon. It would be better for investors, both institutional and retail. The reason we have this is because of the structure of the futures. There is liquidity in the futures market, but we are pushing up against some of the limits on some of the particular contracts that the ETFs can invest in. And yes, in the end, the retail investors are going to be paying that extra amount. It's not just the premium at the moment, it's the fees for the active management and it's the rollover costs when that time comes. It's not as good a product for retail investors, the very same retail investors that the SEC wants to protect. On the other hand, Gary Gensler has made it quite clear he's only comfortable in allowing the listing of instruments that are based on assets, on products that trade on regulated exchanges. And that is the big tangle that needs solving.
Mm-hmm. And in Europe, they already have a broad array of ETPs available. Some, I believe, are linked to spot. So in that market, are they already used to more closely linked Bitcoin funds, correct? And is that mostly institutional driven as well?
It is both institutional and retail driven, largely institutional for the moment, simply because of the amounts that we're talking about. And yes, most of them are linked to spot, and not just to Bitcoin, which is the most liquid, we know that, but also to some of the smaller assets, such as Polkadot, such as Solana. The European investment scene is traditionally a lot more conservative than the US investment scene, except when it comes to listing exchange-traded products based on new types of assets. But that goes back to what we were talking about earlier, Christine, the upcoming regulation that the European Union is devising for the crypto asset sector, which is more supportive than prohibitive and certainly encompasses these kind of offerings for investors. And we also need to take into account the different interest rate environments. Here in Europe, we are looking at negative interest rates. You don't have that yet in the United States. And that is driving increasing amount of institutional investors into some of the higher yielding opportunities that decentralized finance, for instance, offers.